All right. The impact of the financial sector on the economic growth is significant, and the opposite is equally true. The financial service industry constitutes at least 20% of the global economy's GDP, around 23 trillion in 2023, with a compound annual growth rate CAGR of 9.9%. Several factors would undermine the prospect for global investment and finance industry. To name just a few, international political tensions such as the fallout of war in Ukraine, with the triple food, fuel, and financial crisis, along with the post-COVID-19 pandemic and climate disruptions, weakening economic output and rising interest rates. In response to the resulting high inflation and other macroeconomic imbalances, major central banks are beginning to tighten monetary policy and governments are lowering their pace. This will worsen conditions for the finance and investment industry, and particularly for banks, issuers, and fund managers in 2023. From a financial market perspective, experts suggest that the investment trends of 2022 may continue in the first quarter of 2023, but they predict that markets should start recovering in Q2. US interest rates, a key driver of risk aversion among investors, currently stand at 4.7%, will have its toll. Past rising interest rates have made traditional investments such as bonds, equity look less attractive to investors than cash deposit rates. But as a recession hits, investors will shift toward risk assets as stock price will reach their low point. Sovereign wealth funds manage the surplus money that a country occurs over time. A government-backed pool of funds is funded from the country foreign reserve, revenue from exported natural resources, budgeting surplus, and bank reserve. Different types of sovereign wealth funds have different purpose strategies, i.e. stabilization fund, future generation fund, reserve investment fund, and pension reserve fund. Sovereign wealth fund can be typologized into two categories: commodity sovereign wealth funds and non-commodity sovereign wealth funds. The overall contribution to the economy and the stakeholders can be best understood by weighing up three major objectives. Capital maximization by balancing intergenerational wealth, funding future liabilities, and investing excess reserves. Stabilization of the economy by engaging in macroeconomic management and economic smoothing initiatives and policies such as pursuing and ensuring fiscal stability and preserving the exchange rate by scrutinizing large capital inflows and outflows and accommodating export activity. Economic development. Sovereign wealth funds engage in economic development process of their sovereign economy as well as their other developing economies. This can be achieved via investment in basic infrastructure, human capital and institutions, and supporting the country's economic strategies and economic development plans. The International Forum of Sovereign Wealth Funds stated that the year 2021 recorded a 50% increase year on year and 60% increase in number of direct investments made by sovereign wealth funds in the previous 5 years. That's been said, and according to Global Sovereign Wealth Fund, 2022 year was a bad year for most sovereign wealth funds, as they lost around $1 trillion due to hike in interest and the central bank response to cool down inflationary pressure. Other important driving force in the industry is the upcoming recession of 2023. The state-owned investors, which is the sovereign wealth fund plus pension fund assets under management, reached $31 trillion in 2020. All classes of assets experienced loss, including fixed income, public equity, real estate, infrastructure, private equity, and hedge funds. The regional focus of sovereign wealth funds differs depending on the top preference of the top 10 investors. The majority of the funds focus their investment in North America, followed by Europe and emerging markets. It is my pleasure to welcome Dr. Prof. Mogielnicki to the CSGEF Interview with Author series as part of the Future of Banking, Finance, and Monetary Policy Program. FDM, to address the topic of challenges and opportunities facing sovereign wealth funds in the MENA region, in light of his upcoming book, The Political Economy of Sovereign Wealth Funds in the Gulf. Dr. Robert is a senior resident scholar at Arab Gulf Institute at the Arab Gulf State Institute, Washington. Dr. Robert is also assistant professor at Georgetown University, adjunct assistant professor, Georgetown University, Walsh School of Foreign Service, lecturer at George Washington University, Elliott School of International Affairs, author of book titled Political Economy of the Free Zone in the Gulf Arab States. I would also like to welcome Dr. Renee Castaneda, assistant professor, College of Security and Global Studies at the American University in the Emirates, our moderator and our interviewer for this event. I would like to leave the floor now to Dr. Renee Castaneda. Thank you.
Good morning, everyone. Thank you very much, Mr. Mahmood. Thank you very much also for being with us, Dr. Robert Mogielnicki, and welcome to the Center for the Study of the Global Economic Future here in the United Arab Emirates. Today, as per the presentation of Mr. Mahmood Sharif, we will be talking about the future of the sovereign wealth funds, and particularly on behalf of a book that Dr. Robert Mogielnicki is writing, precisely on the issue of the future of the sovereign wealth funds.